Hello, everyone, and welcome to HUBB Live. Some of you might have been joining us in EWO Trader Live that we just concluded just about an hour ago. So welcome back if you are there. If not, welcome. Great to see you for the first time today and during trading hours. I'll be introducing Mr. Rob Roy here in just a few moments. And first and foremost, we need to go over our disclosure disclaimer agreement as we do for all of our live webinars or events. Main thing to take away from it is that we are not licensed investment advisors in the United States. So nothing is to be taken as personal investment advice. Other than that, please feel free to read that in detail at your leisure on the website, as it's always there. But that's all the housekeeping details we need to cover. Mr. Rob Roy, you out there?
I'm here, Zach. How are you? Long time no
Doing well?
see.
Yep, likewise.
Yep. Yeah, doing good. Well, waiting on the Fed like everybody else.
That's been the narrative for so many weeks, as you said, months. Yeah.
Yep. There has been a change since we had the EWO Trader Live. It's down to a 59% chance that we're going to get a 50 basis point rate cut. So it went down from 65% chance to 59 just in the hour and or so since we talked to everybody this morning. So
Bit of
it'll be all over
fluctuation.
the place. Yep, I'm sure it'll change again a few times tomorrow. So,
Alrighty. Well, let's get right into it. Lots of exciting topics to discuss for this session.
yeah, we'll jump right into what I had prefaced with that Evo Trader Live. So, as you know, HUBB Live here is designed to show you how to use the platform to find trades. And first start is to look at the AI signals, and we showed DEI. I'll go back and show them all in a minute, and we'll go through the issues. But just sent that alert out before we came on live, so some of you may be receiving it while we're going through this. But I wanted to go through all the technicals here on this chart. First of all, 90% rating. Obviously, we're interested in doing something along those lines. So I'm just going to take these indicators off and just start the process over again. I'll go ahead and take the zigzag off as well, because that was a big deal for me. As you know, I love having the zigzags within the wave threes to start with, and then when we get a bit of a agreement between the wave three zigzags and the AI target prices, it just makes it that much stronger for me. A whole bunch to talk about in this chart. So first of all, let's just start with the zigzag, and then I'll show you what else there is to target. So you start at the middle, because people always ask, how do you know where to start the zigzag? Well, you start where the first impulsive move is, which is the A wave. So right here off this low, we can see we had that first impulsive move, and then we corrected back down to 66%. And then when you look up here at the 100% extension, you can see that it's right there where the AI target is. If somebody wanted to start it on that first bar, I wouldn't have a problem with that either. It's not an exact science. What we're looking for is approximations, but pretty close. So you can see the 100% extension. There's the AI target. They're pretty much agreeing that just below $18 is where the target price is going to be. So if I take this and then apply the DMI, I always want to see the DMI constructive, even more so when we're looking for an extended level, but call that roughly the 61.8% fib level. We just want the DMI to be confirming the original extension. So we don't need an extended C wave. We're just looking for the standard 100% extension. And so then when I look at the DMI, you can see the ADX. Now, the only thing negative here is when you have this double whammy here on the DMI, like so, there was the A wave. You can see where the ADX moved up. We had the separation between the two directional indicators. We continued up above 40. Once we broke above 40 and came back down, that was the signal that was the end of the A wave impulse. So you start looking for the B wave correction. And then when we start back up again for the C wave, I prefer if the ADX comes below 20 and then turns and goes back up. But coming right down to the 20 level and then turning up is pretty darn close. So that's a little bit of a picky thing on me. It's not really a DMI rule. It's just kind of more of a guideline, as they talk about. That got pretty close. And then you can see we're separating pretty well once again on the two directional indicators, and the positive directional indicator moving up today, even though we're having this a little bit of a tick down, which to me is good, because had it continued higher today, there wouldn't have been enough move left for us to go through and select this as an alert. It could have just sprinted right up to the target today, a la similar to what BX did that we took off this morning. So the setup there is good. The other things that I want to talk about, I'm going to take all this stuff off, and this is just kind of general Elliott wave educational stuff. As you can see, we had a triangle here in the B wave of that zigzag pattern. So it was a complex B wave right through there. So there was the A wave impulse extension, the B wave correction with the zigzag or with the triangle. And then this is one of the three ways that I'm constantly talking to you about how triangles can break out. We get the vertical breakout move, we come back, test the breakout, and then it takes off. Sometimes they don't test it. Sometimes it just breaks out of the triangle and goes. And then other times, this initial move is a false breakout, and the big move is the opposite direction. So oftentimes when you get the vertical move like that, kind of goes hand in hand with how I don't like things to go so vertical. They tend to correct more. And that's also kind of an indication when you get one of these vertical breaks of the triangle that it could be one of those that comes back and tests the point of the triangle breakout. And so now we get the continued move up. We're still a little bit above the 10-day moving average. So even if it goes sideways another day or two, that would be okay. But again, it's given us at least enough to where we can move the trade higher. So now we come to the options analysis part. And all the option stuff is coming with this. So let's just take a look at what the options are available here on DEI. And September's no good. There's only a week to go. And then we look at October, and here's the open interest. And you can see a bunch of contracts, over 3,000 contracts here on the 15 strike. And when you look at the delta, you're like, wow, that's a 90 delta. That's not what you usually do. You're usually looking for something down here along the lines of a 29 delta. But you can see that the bid's 10 cents, the ask is 25 cents. On these lower dollar stocks, like this stock's under $20 a share, I don't do as much on the out of the money options because you just don't have that much of a move. The whole idea of the out of the money options is getting the acceleration up the delta curve, the gamma delta relationship. Well, if you don't have much room for the stock to move, like basically just a little over $1 here is all we're looking for in price movement. If we're looking for that 25 or 30 delta for the acceleration, is just kind of like we're there as soon as you hit the gas, as soon as you hit the accelerator. So there's no time for the actual acceleration to occur. Staying with my auto themes that I use a lot. So when we look here at that 90 delta with all that open interest, I like the pricing here. And so it looks like a lot of people have gone to put this trade on because now they've moved that 180 price to the bid. But it's the midpoint. So just hang in there. It was 175 by 185. 180 is the midpoint. So the market makers have moved it to the bid, but just keep it there with that much open interest. If have to get filled at the 185, we'll do that. But that's where we're sitting right now. And then if we were to go to the Jan options, Jan 25 options, you can see down here now there is a 42 delta, 152 contracts, which you want at least 100, and I would say the more the better. So 152, it's a 15-cent wide spread though. And so if you get filled, you're not going to get filled at 80. So you're going to have to take 85 and hope that that gets filled with only 152 contracts. Maybe the 85 gets filled. maybe not. They may make you wait and pay 90. So now we have a 15-cent wide spread on a 90-cent option. So that's too much. That's more than 10%, which means that we're giving away too much in slippage. So that's not a choice. So it leaves us with the only viable option to use for this. And isn't it going to be cool when all this is available? The only viable strike to put on, and with a 90 score, we want to be involved in this one if we can, is this October 15 strike. And so then we click on that and it brings it over. And at some point in time, we're going to have all this functionality. You're going to be able to interact this with your brokerage. And when you hit trade, go right into your brokerage account and trade it. So all kinds of cool stuff. That's down the road, but that's eventually going to occur. So I just wanted to go through all of these steps as well when going through the analysis to put on a particular trade. So that's a lot of stuff in that one chart. A lot of LA wave stuff going on here. So nice, complex B wave, and then we also have a complex C wave because we had that corrective move. So let's go back, and then we'll look here once again at the setup right there at the target price. And then we can look to see if this isn't another zigzag pattern where we tested the breakout of the triangle, and it is exactly at 50%. And then we come up and you can see where that 100% extension is. A little lower than the other two targets, but not too much below it. So we had a mono wave A, and we have a complex wave B, and we have a complex wave C. So the B wave was complex because it had a triangle in it. The C wave is complex because it has another zigzag in it. And that's just utilizing all of these tools and drawings on the software to help build your chart to find an acceptable position to send out an alert on. And then once you've done all that and you like everything, that's when you go to the options side. And we just did that. And when the options functionality is released, it's going to be great that you all have the opportunity to go through and do that. We take a quick look at the CCI. That looks pretty good, shadowed above the 100. And again, this software makes the CCI a little bit easier to look at, I think, than the legacy software did, because we have the shadowing here on the area either above positive 100 or below negative 100, like you can see back here in May when it was below it. So just a quick look of the eyes, a quick glance of the eyes, you can tell if we're in an area of showing strength or weakness along those lines. All right, so if we want to look at money flow, you looking for confirmation or divergence out of money flow, and look at that. Clearly, there's money going in to DEI, so it ticks all the boxes from the confirming indicators that I like to look at, along with the high score from the AI and all its indices. Now, we've put as many of the percentages and probabilities into our favor as we possibly can on this particular alert, but it doesn't guarantee that it's going to be a profitable trade. It's just one that when you have that many things all lined up, you want to be involved in it. You want to be part of that particular trade setup. So that's just kind of wanted to run you through the entire process of going through and setting things up for one of these AI alerts. And then as we looked at during Ewo Trader Live, you can see that we do have some other potential AI scores. Now, look at the difference in what's going on here with New Jersey resources. Now we have this big vertical move going up without an opportunity to have a little bit of a drawdown back towards this 10-day moving average. We can keep an eye on that one and see if it does. Once again, just over $1 move left, but that's a big percentage difference when you have $1 move in a $48 stock versus $1 move in a $16 or $17 stock. So that $1, much more of a percentage gain in DEI than it is in NGR or NJR. And then if we go to look at the options, you can just see that there's no open interest. Just none. Absolutely nothing in October. So we can't do anything there. In November, there's a little bit down here on the 50 strike. But look at the spread, 30 cents by 85 cents. It's less than 100 contracts. It would have to have been a golden opportunity to try to do something when you have less than 100 contracts, because you're likely going to be paying the ask. You're not going to get anything in the middle. 29 delta, probably not enough for a $1 move out of a $48 stock either. That's when we have a little bit larger projected moves, is when we like that out of the money delta. But the spread negates anything. Look at the 45 spread, $1 by $5.90. You can't trade that, right? I mean, you just can't do it. So that one's out of the question. And then when we go to CIM, Chimera Investment Corp, now we have a little bit nicer movement here to the upside. Once again, $1 movement out of a $16 stock. And then if we take a look at the options availability here, you can see that if we come down, we have 200 contracts down here on the October 17 strike, but it's 15 cents by 20 cents. So how much is that going to move on a $1 move? It is only a 5-cent spread, but you're maybe going to make 5 or 10 cents if that hits its target, maybe. So that's just, it's not worth doing. We could come up here and look at the 81 delta up here on the 15 strike, $1.10 by $1.20. That is a possibility, because it's kind of along the lines of what we just did with DEI. It's an 80 score versus a 90 score, but that's a possibility. So we can kind of keep that in mind. You notice the difference when we go up to the 97 delta. Big jump in price for only 16 deltas. Going from 81 to 97, you're basically paying twice as much. You're paying twice as much on the option for 16 deltas. You have to look at that too. How much delta for the dollar are you getting? And that's insane, to pay twice the amount of money for the option for just 16 delta points. So those are little things that you want to look at when you're setting up trades. And maybe this helps to give you an idea of how we go through the process of selecting what strike we're going to go. It's not just willy-nilly, where's the delta? Boom, pick that. There's other things that go into it. But that October 81, maybe let's go and see what we have in December. So we've got 196 contracts here on the December 15 strike. It's $1.50 by $1.60, so it's only 10 cents wide. So 200 contracts, 65 delta is a little bit more interesting here. Now notice the difference here. You go up 12 deltas and you're paying 70 to 80 cents more, 70 to 75 cents more. So that's a better relationship than the October one was, but still a lot for the difference between the two. But looking here, the ideal one is probably down here around the 15, the 16 strike, excuse me, with 95 by $1.05. It's only 91 contracts, so it's less than 100 contracts, because you go up, it's only 50 cents more for 14 deltas, where here it's 75 cents more for 12 deltas. So again, it's averaging out the delta per dollar. Coming down here, but now, even though this looks really interesting with the 36 delta at 65 cents, again, we're only looking for $1 move. So if we get $1 move out of that, maybe we make 35 cents. We're going to give away probably the entire 10 cents. Maybe we get filled at 60 cents, maybe at 65. So if we have a 10-cent spread getting in and a 10-cent spread getting out, that's 20 cents. And we're only making 35 cents. So we would go through all that. And if everything went as well as could be expected, we might make 10 cents on the option. And that doesn't even count commissions. I know we don't talk a whole lot about commissions anymore because commissions are so much less. When I first started trading, not that anybody cares, you put on a contract, it was $100 to get in and $100 to get out. So even if you only did one contract, it was a $200 round trip for an options trade when I first started trading. So literally on a trade, you had to make $200 just to break even for the commissions. So that's why when people start talking about what they're paying for commissions now, I just shake my head because it's nothing compared to how it used to be. And I guess it's all relative to, but people that weren't around then don't know that, don't know what it used to be like. And so, what did you have to do back then? If you have to make $200 in order just to cover your cost of commissions on entering and exiting, you had to put on larger positions. So your risk management was different. You had to commit more money to it so that you can make enough to justify the commissions and still be left with a gain at the end. So when we're looking at this, the one I think that would be interesting is this 65 delta, because even if we pay the 10 cents, 196 contracts, maybe we can split the spread, maybe not. It's going to be iffy on that one, on whether or not some may get $100.55, some might not. And then we could make enough of the 65 delta if we did 2 to 3 contracts. We could make enough to make it worthwhile on just a $1 move. So that one's a possibility. We'll see if that one is something that we want to look further at. Okay, so just real quickly here, because we're running out of time, I just wanted to look at the zigzag pattern here. I don't like the fact that it's at that 78.6% fib level, but the 100% extension is pretty close there. Let's look at the DMI real quick. That's setting up pretty well. So I'll do some more analysis on this one. Maybe this one comes out this afternoon. Maybe it doesn't. It's borderline there on that zigzag, but I do like the fact that we went sideways just under the A wave extension, generated some momentum for this next run higher. Just another dollar move. Maybe this one works out. Maybe it doesn't. But I did want to allow, we got 5 minutes to go. So I wanted to allow a couple minutes for questions here, and then we'll move on. And so hopefully you found something informative out of all that. But Zach, if there's a couple questions, I can take them now.
Thanks, Rob. Very well said. Yep, we always have some outstanding questions. We'll go with the first one here from Gary. Can you comment about SATS, Echo Star Corp A?
SATS?
SATS.
Well, wow. That's a heck of a move to the upside there. And it's a low score. So at this point in time, it looks like that move is done. This one is one where the AI is saying, yeah, that's probably done at this point in time. And the DMI here is saying, maybe we're just getting going here. You need that ADX to go just a little bit higher. That's a tough one for me because you know how I feel about that separation from the 10-day moving average. I just feel like perhaps that's just too far overdone. I would actually look maybe to take a little bit of a page out of the AI there and look to perhaps fade that one back down a little bit with that gap up and run this morning. So I don't know if that was earnings or what was what the reasoning was for that move, but I feel like they were in the news for something that I saw something about them.
I'm sure we will
Anyway,
just further
Yeah.
in Trade Finder, other webinar this week. Pat here says, "Can you show us how to put the triangle on? My lines don't print." Says Rob just used lines to show the triangle, and that is what I do. But in the drawing tools, there's a triangle tool, and I see it in his favorites, but maybe that is something else. So maybe if you could just show that.
Talking about right here, the triangle pattern. And you're right, Pat. I don't utilize that. It's there just because it's a triangle, but I much prefer to draw the triangles on my own. So let's just pick one here that had a triangle in it. So just going back to IWM, just right click to remove the drawings. So I just have the straight line in my favorites under the line tool. So it's just the trend line tool. And then just click where you want to start the line and move your cursor. And then when you get to the point where you want to stop, you just click it again. And then to draw the lower trend line, you click on that trend line icon again. Same thing. Click to start drawing the line, click to stop drawing the line, and then it's there. And it'll come back every time we go away from it. Like if I go to UNG and then come back to IWM, the triangle is still there that we just drew. The software remembers it. And then if there's ever anything that you've kept and you want to get rid of for future drawings, you just put the cursor on it, right click, and hit remove the line. You saw you could click remove all drawings. It would have removed all of them, but I just wanted to get rid of that one trend line at that moment on the IWM. So
Thanks,
I
Rob.
hope that helps.
Absolutely, it did. And 2 points there. I just wanted to make sure that everyone notices that the cursor he has on is the arrow. So it's important to make sure that it's not on crosshair, as that might interfere with being
Yeah.
able to utilize drawing the tool. And the second
Yep.
thing is, Rob, if you
Absolutely.
don't mind clicking on your little picture up there in the far right, furthest right on the toolbar. Um, there we go, and see how creator mode and autosave are on. Those need to be on if you would like to have your page be set and saved as a default or a template, as Rob showed just a bit ago. So those things are you want to ensure you want to have toggled on for that type of functionality. And if you turn it off, then it's more for compact chart analysis. So Michael here says, "I'm new to this platform. How do you bring up the option table?" And Pat added in that the option table isn't quite available to us yet. And yeah, Rob mentioned that it is coming soon. It'll be very, very exciting and worth the wait. As you can see down there at Rob's toolbar under the ADX or DMI indicator he's showing, there's that options button. And that's where you will go to access the options chain and be able to perform your options analysis and even execute a trade at some point. All right, we are
Yeah.
right at
As
time.
Zach said, I'm sorry, Zach, I didn't mean to interrupt you. I just wanted to further your point. Yeah, I'm showing you what's coming. That's in beta form, and Jeff and I are using it to figure out any bugs that may be there and stuff before it's fully released. Just wanted to show you the cool stuff that's coming, and you can change the deltas and all that stuff. It's really cool functionality. You don't have it yet, but it's coming very, very soon. So, yeah, Zach was spot on, and thanks for clarifying that with turning on autosave and creator mode, Zach, as well. So, appreciate your help, and we'll be here each week just to try to add little tidbits to help you love the software more and utilize it more in identifying trading opportunities. So, Zach, thanks for your input and hard work as always. Thanks for taking another slice out of your trading day to watch with us today, and hope everybody has a great rest of your trading day. We'll see some of you for Trade Finder tomorrow. Have a great rest of your day. Take care, everybody.